Hello, ladies and gentlemen. Happy new month to you all. I welcome you to yet another month. If you can see my screen, I will appreciate that you type in hi in the comment section so that we can get this session started. So please, I would like to see some feedbacks. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. So let's see what we have here. It's a happy new month, everybody. Okay, so let's see what we have here. So I can see Kraken. Good morning to you. Thank you. OZ94, good morning to you. Thank you very much. A Carrie, good morning. Yes, happy new month to you too. Okay, so we have Amel Rock Row 716. Good morning. Okay, 314. All right, so I will take this as a positive feedback that we are good to go this morning. So excited to welcome you to another promising session on the X-Trend Speed. My name is Sheriff Daramola, and as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And as usual, it's our culture here that we review all the pairs we have been monitoring since the beginning of the week. So we shall be reviewing all the pairs we've been monitoring since the beginning of the week. We are going to be checking how well those pairs are doing, and then I will be advising you on what our next line of action will be on all of these pairs. And if there are any updates, I will be letting you know. So my advice is that you try as much as possible to stay tuned in so that you don't miss out on any of these ideas and opportunities I will be dishing throughout this session. So with that being said, let's dive right into the market. But before we go right into the chart, it's very important that we look at the economic calendar, as we have some macroeconomic event coming up today, which will definitely be a form of catalyst for price action for today. And looking at what we have here being the first day of the week, we have a series of macroeconomic events coming in for the US dollar and the euro. For the euro here, we have the core harmonized index of consumer prices, which has already been published, and the data coming in here seems a little bit mixed, as the first one for the year on year came in 5.2%, which comes with a variance of about plus 1.25. That's a positive signal for the euro there. Then the other one for the harmonized index of consumer prices for year on year came in with a variance of a negative 2.6, which is not quite good for the euro at that number. But we are going to be looking at the structure from a technical standpoint to see how the euro is going to be reacting to this macroeconomic event. Then we also have the ADP employment change coming up later on today, and that's the private sector employment report. We shall be looking forward to that too as well. And the previous data for this is 235,000, and we have a consensus of about 178, which is a little bit below the previous expectation. So let's see what is really going to be happening in that regard. Is the result going to be coming as expected, or is going to be beyond expectation or below expectation? And we shall definitely be seeing how participants in this market will be anticipating this event. We shall be looking at the price action, understanding the psychology in the market that will be coming in anticipation of this event. Then we also have the ISM manufacturing PMI survey for the month of January also coming up, and from what we see here, we have the previous data at 48.4, and the consensus is projecting a 48, which is a little bit below the previous data. So we're also going to be looking at how the price action will be anticipating this event too as well. Then we also have the Fed interest rate decision also coming up today, which is quite that's another high impact event, and there is an expectation that there will be an increase in interest rate to 4.75, that's 0.25 basis point. So we are going to be looking at if this is going to be what we are going to be seeing later on today. So the expectation is that we are going to be having 0.25 basis point increase. So let's see what is really going to be happening in that regard. Then we also have the Fed monetary policy statement, which is coming up in 8 to 9 hours from now. And to top it all for today, we have the Fed Chairman Jerome Powell is going to be delivering his comment on the policy outlook for today, and will also be responding to some questions during the press conference. So we are going to be looking forward to see how the market is going to be reacting post the event and pre the event. So in that regard, with the information we have here, let's dive right into the chart right now. Let's see what is really going on in the market, and we also want to be looking at how price action is going to be anticipating all of this macroeconomic event that we have here. So as usual, the first commodity we are going to be looking at this morning is the US oil. And what do we have on the US oil? Well, I'm glad to let you know that yesterday's trading session was quite impressive, as we saw our price action move significantly against our expectation, climbing the $77.50 level, climbing the $78.20 area to break out of the $79 area. Remember, at the beginning of the week, we have been on the bearish momentum here after joining the breakdown retest of the $79 level, and in fact price action moved about over 230 pips in our favor before this bullish momentum happened. And during the live session yesterday, we actually expected this kind of situation that we had here, and I told you that for those who had missed out on both of this opportunity at the $79 level and the $78.20 area, that we want to be seeing price action to come back and either do a retest of the $77 area to trigger another wave of bearish momentum. And if you remember vividly, I also told you that there is a possibility that price will break out of the $77.50 level to the upside, that we need not get anxious or caught in an anxiety in that regard, as we might be having the structure rejected, and if a breakout of that structure happens, that we definitely will be looking out for selling pressure as price action come back to where price started this week. And this is exactly what we have witnessed here, though personally on my side I missed this opportunity, but some people would have actually taken advantage of that move. And for those who are taking advantage of this bullish momentum that took price back into the structure around the $79.50 level, kudos to you guys, as you will currently be running with over 200 pips in profit. Now, as we head into the New York session today, what is really going to be our plans on the US oil? And one thing about this current this commodity is the fact that we also have a high impact event coming up today. I told you on Monday that the OPEC Plus will be having a meeting today to decide their production target for the year, and the outcome of this event will definitely be having a major impact on price action. So we are going to be looking forward to this event. I'm not sure if the event has happened, but from what I have here, from my feeds here, the event is yet to happen. But once it happens, we are going to definitely be seeing some reaction in the market in that regard. So let's quickly run through the daily time frame. Let's have an holistic view of what is really going on in this market right now, and let's see if we could have a little insight into the expectations of the participants in this market in that regard. I mean, in anticipation of that OPEC Plus meeting coming up later today. So in that regard, I'll be scaling up a little bit to the daily time frame. Let's quickly have a preview of what is really going on. Let's see if this bullish momentum that we have been witnessing in the last 24 hours will continue, or it might likely be a false move. Now, going back into the daily time frame, remember we had a review of this at the beginning of the week where we laid emphasis on the fact that price action has been on a bearish momentum in the last 6 to 7 months. And in that regard, we had this bearish trend line figured out after connecting the series of lower highs here. So we have a dotted black line on your screen right now, which is the bearish trend line that has been guiding bearish momentum in the last 6 to 7 months. However, if we zoom into the current structure and look at what has been happening here since the beginning of the year, probably in the last 2 to 3 months here, we will take note of this key important structure, which is the $80 level. And why is the $80 level so significant with this current structure? Well, if you look at what has been happening around the $80 level in the last couple of months, you will notice that every time price action comes within this zone, we have been witnessing selling pressure from that level to further emphasize the strength of the sellers at this point. We saw the situation happen here in the month of November, though we had this demand zone, this strong demand zone here. But one thing about the demand zone is that even when price action, when buyers push price to the upside, we saw some level of strength within the $80 level, giving us a clue into a possible bearish momentum at that point. We also have one here which happened here in the month of September. As you can see here, we saw signs of selling pressure. We saw a little one here on the first week of October. Then on the first week of December, we saw another selling pressure around this area. Then during the later part of last year's trading session, I mean on the 30th, 31st of December, we saw price action close at exactly the $80 level. And once the year resumed, and on the 1st or 2nd of this year, we saw this engulfing bearish candle taking price action out of that structure to further emphasize the level of selling strength around the $80 area. And prior to last 2 weeks trading session, 2 weeks ago, prior to 2 weeks ago, we initially identified a reversal pattern here in the form of a double bottom structure. As you can see, we saw the lowest point price has ever been here in the month of December at the $70 area. Price action came into the $80 level. We saw another selling pressure, and price was unable to break the previous structure here, hereby giving us a higher low. And with the current structure we have here, you would notice that we have something that looks more like a reversal pattern in the form of a double bottom structure. But our reversal pattern is not yet matured if we don't have a neckline to guide trading activity. So in that regard, we had our neckline sitting around this area, and lucky enough, coincidentally, we have the neckline sitting around the $80 level, which also shares a confluence with that selling niche at that point. And to make this reversal pattern a mature one, we want to see an actual breakout of the neckline area at the $80 level. And look at what happened here. The breakout of the $80 level will definitely share a beautiful confluence with the bearish trend line we identified earlier. And if a breakout of the trend line happened, what sign is that giving us? It's giving us a sign that the bearish trend line may no longer have the capacity to continue to hold selling pressure. And if we take into consideration this higher low here, we definitely were thinking that a bullish momentum is likely going to be coming in at this point. And 2 weeks ago, we actually saw the breakout of the neckline and the bearish trend line to signal a confirmed reversal pattern. However, something very interesting happened here in the last couple of weeks as we continue to see selling pressure resume around the $82.50 level to negate all expectations of a bullish momentum. And in the last 2 weeks, what we saw here is the fact that price action has been caught within a flat channel here to further emphasize the level of indecision in this market. And whenever we have an indecision like this, it is very, very obvious that liquidity has been withdrawn from the market, as major key players in the market are looking forward to a catalyst that will be bringing some level of positivity or fear into the market to drive price movement. And what I told you earlier, I said that we are expecting a OPEC Plus meeting coming up today where they are going to be deciding the production target for the year. And I think this is the reason why we have been witnessing this consolidation phase in the last 2 weeks. And you know, from a technical standpoint, whenever we have a consolidation phase like this, all we need to do is to remain patient and look out for a signal which is likely going to be coming in the form of either a breakout of the channel around the $82.50 level to give us a signal to buy, or a breakdown of the support level of the channel around the $78 level to give us a signal to sell. So in this regard, we really need to be very patient at this current structure, as you would agree with me that we are at a critical point in this market. So what are we going to be doing to get ourselves prepared for the New York session today? What are going to be our plans? What are we going to be looking out for? And how are we going to be positioning ourselves in such a way that we can catch this move whenever it happens? So right now, where are we in this market? The first thing we should observe now is that on Monday we saw price action drop back into the $78 level here, as you can see, which is the support level of that flat channel we just identified. And one thing we have noticed around the $78 level area is that we have been seeing some buying pressure coming in around that area. In fact, the candle that closed yesterday closed in form of an hammer candle, which is a signal that there is a level of buying pressure still existing at this current structure. And if we look at the breakout of the neckline here, which shares a confluence with that $80 level, we might from a technical standpoint, we should be expecting that price will likely come back, do a retest of the structure that was broken a couple of weeks ago, which is the trend line, and then we might likely be seeing some buy pressure around this area to incite another wave of bullish momentum. So at this point in time, there is still a likelihood that we could be having a bullish momentum here, despite the fact that we noticed some selling pressure around the $82.50 level. So I'm of the opinion that major key players are actually waiting for the outcome of this meeting to decide what our next line of action will be. And one thing I will let you know here is that whatever the decision is, wherever price action will be moving from this current structure, it's very likely that it's going to be very massive. So all we want to be doing now is to position ourselves in such a way that we can catch that move when it happens. So we shall be scaling down to the 1 hour time frame to have a better perspective into what is really going on around here, which is between the $79 level and the $78 area, to decide what our next line of action will be. So going down to the 1 hour time frame right now to have a better perspective into what is really going on here, I told you that we are going to be looking at what is happening between the $79 level and the $78 area to decide our next line of action. So in that regard, what we're going to be doing right around the 1 hour time frame, let's see what has really been going on in this market since the beginning of this week. Now look at the structure we have here on the 1 hour time frame. We have an $80 level. Remember the key level we identified earlier on the daily time frame, which we said is a very strong, significant structure we shall be using to guide trading activity. And in that regard, we have been I'm sorry for the breaking transmission. I had to sort out some personal issues here, and everything is fine and we are good to go. So like we said here, we want to be looking at what has really been happening on this one since the beginning of the week. And what we have noticed is that price was initially caught within a channel between the $80.50 level here, which was a resistance point for this week, and then we had a support level around the $79.50 area. And in fact, price was caught within this channel in the first few hours of the new week before we saw the breakdown of that channel here to emphasize some level of selling pressure. And as soon as price broke down the $79.50 level, we saw some retest of structure. Price dropped to the downside. So we have been witnessing some selling momentum since the beginning of this week. And if we connect the series of lower highs here we have a resultant bearish trend line we can be using to guide our trading activity for today. And following this bullish move we saw yesterday, we saw that this bullish momentum has taken us out of this current structure. We have a little breakout of the bearish trend line right now as price is currently trading above that structure. So with a breakout of the trend line here, the question now is this trend line no longer strong enough to hold bearish momentum anymore, as we saw a breakout of the structure during the early hours of today? That is one thing we are going to be looking at for today. So in that regard, the $79 level will be a very significant level that we shall be using to guide trading activity for this week. And how do we want to be using this trend line, this key level, to guide our trading activity? Well, one thing I want to be looking forward to here, considering the fact that price action has been bearish since the beginning of the week and we are actually within a strong supply zone at this point, if at any point in time we have a breakdown back of the bearish trend line, breakdown of the $79 level as well, selling pressure below the structure, we might likely be looking forward to selling opportunities on the US oil. So for us to sell the US oil, we want to see price action break below the $79 level as we continue to look out for selling opportunities on our lower time frame below the structure. However, if price does not break down the structure but instead we start seeing buy pressure right above this level on our lower time frame, then we might likely be getting ready to join a bullish momentum at the breakout retest of structure on our lower time frame, with the option of adding more position to our existing trade if price breaks out the $80 level. So these are the things we are going to be looking forward to going into the New York session today. So we're at a critical point right now, which is the $79 level. So what I said now, again, let me do a quick recap of what I said. We are going to be using the $79 level and this bearish trend line as a key factor for trading activity for today. And I said the only way we can use this is to be patient enough to see how price action reacts with this confluence here. So if a breakdown of this confluence happens and selling pressure resumes below the structure on our lower time frame, when we scale down to, let's say, your 5 minutes, your 10 minutes, or your 3 minutes time frame, we start seeing selling pressure below that structure, we'll definitely want to be joining a decline to the downside. However, if it so happens that buy pressure is what we see here, then we look out for breakout retest of structure on our lower time frame from that level to join a rally to the upside, and a further breakout of the $80 level will definitely be giving us more opportunity to add more position to our existing trade. And please note that I said earlier that any breakout of the structure today is really going to be very massive, as this is going to be an outcome, it's going to be as a result of the outcome of the OPEC Plus meeting that is coming up today. Now, to better have a perspective into what is really going on here, I would like us to scale down to a more lower time frame, let's say the 50 minutes time frame, to see what is really going on there. Or let's go down to as far as the 5 minutes time frame, and this is what I can see here on the 5 minutes time frame. And remember, this is the $79 level here, and I think buy pressure appears to be coming in right around this area. And if we look at the structure here closely, you can see something like a reversal pattern following this impulsive move that happened during the early hours of today. You saw the first touch, you saw this level, buy pressure around this area, giving us a clue that buyers are likely coming in with a neckline sitting around the $79 level. We finally saw a breakout of the structure. So I'm of the opinion that it's more appropriate to buy at this point. We have the $79 level here, and this is the reversal pattern. Hold on a second, let me show you that reversal pattern here. So we have a reversal pattern here, and you see, and that's the neckline of that reversal pattern. Hold on a second, please. So we have the neckline of that reversal pattern, which has been a supply zone for some time now. and that should be around the $79.10. So a breakout retest of the structure is a very good opportunity for us to buy the US oil right now. You could buy anyways from now on, or you could wait for price action to come back and do a retest of the structure to join that rally to the upside. So let's continue to guide our position judiciously. Move your stop loss to somewhere below the previous structure here, somewhere around the $78.89, and let's see how far this bullish momentum will go. So best of luck on that one. If you really have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section. So I will be taking the next 10 to 15 seconds to read through the charts and see if there are any questions before I move on to the next option. So let's see, what do we have right here in the comment section? Okay. Amelero, okay, I hope I pronounced that correctly. I'm pleased to meet you too. All right, 780, how are you doing today? 828, good morning. A3, Razak A3, good morning to you. HBI, good morning. 224, good morning to you as well. Richard, good morning. All right, glad to have you around, Richard. So in the absence of no questions, I guess we are all on the same page here. So I will be moving right into the next option. And the next option we shall be looking from here. Okay, Richard says is from the Philippines. Oh, we are welcome here and happy new month to the Philippines. All right. Okay, so let's move on to the next options. The next option we are going to be looking right now is the US tech. And remember, we have been on this bearish momentum since the beginning of the week as we took advantage of the breakdown of the 12,100, which is the first position we took this week. Then we also had another position at the breakdown of the $12,050 level, with another position right below the $11,950 level. And to make things easier for us during the New York session yesterday, we identified two structures here to guide our trading activity. The first one was this bearish trend line after we connected a series of lower highs. As you can see, we have been on a bearish momentum since the beginning of this week. Then we also had this structure around the 11,950, where we said if price action transitions into some selling pressure below the 11,950, we want to be joining another wave of bearish momentum. But lo and behold, what did we see here was a breakout of the bearish trend line, which is a very beautiful sign that that bearish trend line is no longer strong enough to hold bearish momentum. And I simulated this structure during our live session yesterday, when I told you that if price action breaks out of this structure, that we might likely be seeing a retracement of that previous impulse leg, where price might likely continue to find higher highs. And one thing I stated here yesterday is that we are going to be taking into cognizance this structure at the 12,050 for selling pressure and the 12,100 for selling pressure as well, to join the second wave of a possible bullish momentum at this point. And I also made mention that those who are counter trend traders, or if you are a scalper and you feel comfortable taking counter trend opportunities, you might want to be joining at the breakout retest of the 11,950, and I told you that you should be moving your stop loss accordingly as price action moves in your favor. And for those who are taking the counter trend opportunity, well done to you guys for being on standby, as you will currently be running with over 100 pips in profit. And if you are in this buy position, I will suggest now that you should move your stop loss accordingly to lock in some profit, as we might likely be seeing the beginning of the second wave of the bearish momentum anytime soon. And what I will be advising you to do is to move your stop loss to somewhere around the $12,020 level. Let's see how price action plays out from this point, and if a breakout of the $12,100 level happens, we want to be adding more position to our existing trade. Now, for those who are not yet in this trade and those who have been with me on the sell momentum since the beginning of the week, we were taking out of our position around the 11,950 level with about, let's see how many pips was that. about 150 pips on the first position and about 100 pips. So we had about 250 pips so far for the sell positions we had on the US tech. So now that we are going into the New York session today, what is really going to be our plans? What are our expectations? What are we going to be looking out for, considering the macroeconomic events that is coming up later on today? Now, before we go into the details on the US tech, I would like us to go back into the daily time frame. Let's have an holistic view of what is really going on in this market so that we can have a well-informed decision that we can use to take advantage of any trading opportunity for today. Now, scaling back up into the daily time frame here, remember we identified this bearish momentum on the daily time frame at the beginning of the week, as we saw that the structure here has been very bearish. In fact, throughout the course of last year, price action had continued to find lower lows and lower highs, and as a result of this, we were able to connect the series of lower highs here, which gave us this resultant bearish trend line that has been guiding that bearish momentum since the beginning of last year. However, at the beginning of this year, we had some couple of structures which we were actually using to guide our trading activities, and one of the structure is the $11,000 level, which has been a strong demand zone for over 6 to 7 months now, and we took advantage of this buy position where we rolled the move all the way up, and as you can see here, price action broke out of the $11,700 level, a level which has been a strong selling niche for about 2 to 3 months here. As you can see, as soon as price gets into that level, we have been witnessing some selling pressure. Now, it so happened that last week we saw the breakout retest of the 11,700, a level which also shares a beautiful confluence with that bearish trend line that we identified earlier, to further emphasize that the trend line might no longer be strong enough to continue to hold bearish momentum. And coupled with the demand zone that we saw here, as sellers were unable to break down the structure here, we might likely be getting ready for another bullish momentum. But when will the bullish momentum start? When will this retracement end is what we don't know. So what we are going to be doing right now is to zoom into the current structure here and look at what has been happening on this chart in the last couple of weeks to decide what our next line of action will be. So look at the structure we have here. We can see that at the beginning of the week, we saw some selling pressure around the 12,100, and if we go to the back, if we go out to our far left here and look at what has been happening around the structure in the past, you can see that this level has been a strong selling niche. We saw selling momentum from this level in the month of November. We saw the same thing happen here during the first week of the month of December, and midweek of December we saw another sharp rejection of the $12,100 level. And what we saw here in the last 3 to 4 days now, we can see that sellers have been rejecting every attempt by the buyers to break out of that structure. So with the current situation we have here, we are at a critical point in this market where anything could actually happen at this point. And to make things a little bit easier for us, we shall be using the $12,100 level here as a yardstick for trading activity. So now, how do we intend to make use of the structure to decide our trading activity, trading opportunity for today? Well, one of the things we might be looking forward to here, considering the bullish momentum that we have been witnessing since the beginning of the year, price might likely break out of the $12,100 level for the first time in over how many months now? Over 2-3 months now, for the first time, to signal a strong bullish momentum. And if that happens, buying pressure above this level will be a very good opportunity to add more position to our existing trade. In as much as we are looking forward to buying opportunity here, we should not ignore the possibilities that sellers might likely come in here. And if we take into consideration the impulsive move that started this year from the 10,600 level to the upside, you will notice that a retracement phase is long overdue, as those who are taking advantage of this opportunity right above the structure here will at one point in time want to be doing some profit taking activities, and this will be reflected on the chart as a retracement phase, probably into our golden zone area before another wave of bullish momentum will happen. So if we are going to be anticipating a sell momentum here, we might likely be looking at a breakdown of the structure to around the $11,950 level that might likely bring price back into the trend line, which was broken a couple of weeks ago, to do a retest of that structure. And if you look at what is happening here, it shares a very beautiful confluence with a key level sitting at the 11,500, and we might likely see buy pressure come in from this level to push price to initiate another wave of bullish momentum. That is one scenario, and if price further breaks down the 11,500, we might be looking forward to another wave of sell-off. So these are the two scenarios that we might be looking forward to. So what we are looking forward to is either price breaks out of the $12,100 level for us to be joining a bullish momentum, or a breakdown of the $11,950 level to join a decline to the downside. But if we take into consideration the strength of the sellers around the 12,100, it is very likely that price might drop further to the downside. And if it's going to be dropping further to the downside, how are we going to be waiting for price to get to the 11,950, breaking down the structure before we join? Or is there a way we can take advantage of a selling opportunity at the resistance point around this area? So in that regard, we shall be scaling down to the lower time frame, where we want to be seeing what is really going on around the $12,000 area to decide what our next line of action will be. So if we scale down to the 1 hour time frame, what can we see here? So this is the 1 hour time frame, and since the beginning of the week, I told you earlier that we have been on a bearish momentum, and at the beginning of the week we identified a channel, remember, around the 12,200 and the support level at the $12,100 level. And one thing we noticed at the beginning of the week was that price action actually broke down the $12,100 level to give us a signal of a bearish momentum. And from a technical standpoint, whenever we have a breakdown of a structure like this, we should be expecting that one point in time price is likely going to come back, do a retest of that structure to incite another wave of bearish momentum. And what we can see here looks more like that. As we can see, after the breakdown of the $12,100 level here, we can see that the bullish momentum that began yesterday brought price back into the 12,100, and what happened immediately was quite interesting, as we saw selling pressure come in from that level to give us a sign that we might be having a retest that might incite a bearish move. Though we had the move to the downside here, but price came back again, but was unable to break out of the previous structure to further emphasize the strength of the sellers at this point. So for me at this point, I will be definitely looking out for selling opportunities right below the $12,050 level for today to join that decline to the downside. So the retracement, the bullish momentum that we saw yesterday from this level is likely going to be a retracement phase of that previous impulse leg to incite another wave of bearish momentum. So if that is going to be happening here, how do we want to be taking advantage of this move? So if we zoom into the current structure here, which is here, it appears that price action is transitioning gradually into a double top structure. We can see the first touch of the 12,100. Price was unable to break the previous structure, and we have something like this. And for this reversal pattern to be mature, we definitely want to be having a neckline area, which we definitely be using to guide our trading activity. So with a double top structure cited here, for this reversal pattern to be mature, we definitely want to be identifying a neckline area. And if we look at this closely, we should be having a neckline sitting somewhere around the $12,030 level, somewhere around here. And I would like to label it for the sake of clarity so that we can see things more clearly here. So we have the $12,000 level. I would like to give this a black color, a darker color, so that it will be able to, we can recognize this and differentiate it from the previous structures we have identified here. So this is what we have here right now. So we have a neckline sitting around the $12,030 level, in as much as I'm having a sell stop order below the $12,050 level with the hopes that price is definitely going to drop to the downside. You might want to wait for a breakdown of the $12,030 level if you are a very cautious trader, and look out for selling pressure to add more position to our existing trade here. So this is what I'll be looking forward to sell the US tech for today, breaking down the 12,050. And if you're a cautious trader, you want the structure to be matured before you want to be joining, then you can wait for price action to break down the $1230 level to join that decline to the downside. And where will our take profit target be if we are joining this move to the downside? Well, if we take into consideration this previous impulse leg here and consider this bullish move as a retracement phase, then definitely we want to be bringing out our Fibonacci extension tool, rather run it through the previous impulse leg, and we'll definitely be aiming at an area between the 127.2 and the 1414 area as a TP target for our sell position here. So if we look at the 127.2 and the 1414 area, it falls within the structure. So let us label this area for the sake of clarity. So we have our potential TP target around this area. So we'll place this right inside the box. Then we have something like this. So this is what we have here for the so on a long-term perspective, we are looking at somewhere between the 11,700 and 11,600 area as our TP target for the sell momentum. So let's hope that price will break down to 12,050 and the 12,030 zone to give us a signal for this bearish move. And one thing I would like us to take note here as we join that bearish momentum to the downside is that if we look at the structure here since the beginning of the year, remember I told you we identified a bullish trend line which has been guiding bullish momentum since the beginning of this year, and as a result of that we had that bullish trend line figured out at this point. So what happens now is this: if the bearish momentum that breaks down the $12,050 $12,030 zone happens here and it continues to drop to the downside, as soon as price gets into this trend line, I'm advising us to move our stop loss accordingly to lock in some profit. And look at that trend line there, it shares a beautiful confluence with that $11,950 level. Remember that level has been a strong selling niche in the past before the breakout of that structure happened during the later part of last week's trading session. So we might likely see price break down that level to the downside to incite another wave and welcome another opportunity to add more position to our sell position. So I am saying that as soon as price gets into the structure, kindly move your stop loss accordingly to lock in some profit and wait out and see how price action will be reacting with this bullish trend line to decide if we are going to be adding more position to our existing trade if price breaks down the structure to the downside, or we might likely be seeing buy pressure around this area that might incite another wave of bullish momentum. So we want to be very careful. As soon as price gets into the structure, move your stop loss accordingly, lock in some profits, and let's wait out to see how price action react to that level. And if it further breaks down the level, then we want to be adding more position to our existing trade on the US tech. So those are my views here on the US tech for any selling opportunity on this one. Now, considering the fact that price has been caught within a channel here since the impulsive move here, we should not ignore the possibilities that buyers might likely come in. So we can see we have this channel here between the 12,100 and the $12,030 level, where the 12,100 appears to be the resistance point for this channel and the 12,030 appears to be the support level for this channel. And this channel we have here could transition into a trend continuation pattern in the form of a bullish rectangular pattern. And what we want to be seeing if we really want to buy the US tech, if a buying opportunity is going to be coming in here, we want to see an outright breakout of the 12,100 with buying opportunities above the structure to join that rally to the upside. And if a further breakout of the $12,200 level happens, we want to be adding more position to our existing trade. So these are my views here on the US tech. I hope I made myself very clear, and I've tried to simultaneously simulate all the possible scenarios that might likely happen on this one. So my advice is that we be on standby so that we can catch this move when they finally happens. So that is my view there. If you have any questions, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair. I'm already running out of time here. In fact, I never knew time has flown so soon. All right, so moving on to the GBPUSD. So here we are on the 1 hour time frame of the GBPUSD, and in fact on the GBPUSD we have been witnessing some choppy situations here in the last 24 hours. Remember, we have been on a sell momentum here. We had a sell position triggered on Monday after the breakdown of the 1.23800. We saw the breakdown of both the bullish trend line and the 1.23800 level, which was a support level of this initial channel we identified at the beginning of the week to incite a bearish momentum. And we actually added one more position during the UK session yesterday at the breakdown of the 1.234 level. And one thing I told you yesterday is that we should move our stop loss somewhere right above the 1.23400 level to guide our position against any sudden pullback that might likely happen around this area. And in fact, in the last 24 hours, price is here to take us out of all our sell positions here, as the first position is running with about, let's see how many pips, about 60 pips in profit, and the second position here is running with about 17 pips in profit at this point. So our stop loss still remains where it is. So let's see how this is going to play out as we head into the New York session. Now, what is going to be our plans for today? How do we intend to trade the GBPUSD during the live session today? And taking into consideration that participants in this market are anticipating this macroeconomic event that we highlighted at the beginning of the session, and you can see that we're beginning to see some reflection showing participants in this market anticipating this event. As you can see, a huge consolidation phase here in the last 24 hours, as there is an indecision in this market right now. And you know, from a technical standpoint, whenever we have an indecision like this, we all need to be very, very patient at this point, as price could go either way. So at this point, we are looking for two things to trade the GBPUSD, or to add more position if certain opportunities will come in at this level. Now we have a structure at the 1.23100 level, which has been the support level for this buying momentum we have been witnessing here in the last 24 hours. So I will be suggesting that a breakdown of the 1.231 level during the New York session today, with selling pressure below that structure on our lower time frame, will be a very beautiful opportunity to add more selling position to our existing trade. However, if price action breaks out of the 1.23250 level in such a way that we have something like this with buy pressure above the structure, we might likely be seeing a bullish momentum with a further breakout of the 1.234, welcoming additional position to our existing trade. And this might likely bring price back into the 1.238. Remember how important the 1.238 is for this week. Remember, at the beginning of the week we identified two structures here: the resistance point for the week at the 1.2400 level and the support level for the week at the 1.23800 level. And you know that we had the breakdown of both the trend line that has been holding bullish momentum since the beginning of the year and the 1.23800 level to incite this bearish momentum, and there is a likelihood that price might come back to do a retest of that structure that was broken on Monday to incite another wave of bearish momentum. So let's keep this also in mind as we continue to monitor price action on the GBPUSD. So we might likely see a breakout of the 1.2350. If this happens, I want to be seeing this as a retracement of that previous impulse leg, and if so happens, we could likely see a sharp rejection of this level where price will transition to the second wave of that bearish momentum. So let's be on standby to catch these moves when they happen. Then another thing I would like us to identify here is, considering the buy pressure we have been noticing here, I would like to connect the series of lower highs here higher lows, rather, to identify this trend, this new trend that we are seeing right now, which might transition into a retracement phase. So what I want to be using to guide this move, our move for today, is that if at any point in time there is a breakdown of that trend line, it will be a good opportunity to sell. So I would like you to smudge my screen at this junction so that you can use it as a reference point when you are about to make your individual decision. It will make things a little bit easier when you are about to make your individual decision on this one. So let's be on standby, and for those who are still in the sell position we took advantage of on Monday, ensure that your stop loss is somewhere right above the 1.234 level, where we said we are going to be placing it for the meantime as we continue to monitor price action and at the same time give room for price action to breed. So that is that on the GBPUSD. If you have any questions, feel free to drop your inquiries in the comment section. Then we moved on to talk about the XAUUSD yesterday, and this is the same thing we have here on the XAUUSD. Remember, yesterday we had a sell position running with a TP target around the 1901 level, and we actually hit our TP target on the first position at about 2400 pips. Remember, the first position was triggered at the breakdown retest of both the trend line here and the $1925 level. Then we had a second position triggered at the breakdown of the $1920 level, and that one also closed with 1900 pips. So we have over 4,000 pips in profit on the XAUUSD as at today. At least minimum we have about over 4,000 pips on that one. Now we saw this bullish momentum that happened yesterday, and sincerely I missed out on this opportunity yesterday as this bullish momentum took us all the way up into the 1,930 level. Remember, I told you that as soon as price action moves in our favor and gets into the $1,900 level, we want to be monitoring what is really our price action is going to be reacting to that structure to decide if we are going to be adding more position to our sell position or we shall be getting ready to join a decline. You know, I told you if we are going to be adding more sell position, we want to see a breakdown of the 1900 to add more sell position. But if we start seeing buy pressure here, we want to be joining a rally to the upside. So for those who had been on standby to have taken advantage of this move at the site of this buy pressure at the 1900 level, well done guys, kudos to you, as you would currently have been running with about over 2,400 pips in profit. Now, going into the New York session today, what is going to be our plans? What are we going to be looking out for? Well, first of all, I want to call our attention to this bearish momentum that we have been witnessing here since the later part of last week's trading session. And as a result of that bearish momentum, I was able to connect the series of lower highs here, which gave us this temporary bearish trend line, which you can see on your screen right now. And this trend line has been guiding our bearish momentum since the beginning of the week, and the same thing has continued here. As you saw here, as soon as this bullish momentum got into the 1930 level, we begin to see some consolidation phase around this area to further emphasize the indecision in this market. And one thing about this indecision, like I told you earlier, majority of the participants in this market are anticipating the macroeconomic event coming up later today, and in that regard, a lot of people have stepped aside, bringing little liquidity in the market, waiting for this happen to bring some catalyst into this market. So right now we have a beautiful channel between the $1930 level and the $1925 area, and this shall be the basis for our trading activity for today. And you know, in this community, whenever we have something like a simple channel like this, all we need to do is to remain patient here and wait out for either a breakout of the channel to the upside, that is a breakout of the 1930 to welcome a buy position, or a breakdown of the 1925 level to be thinking of selling the XAUUSD for today. For me personally, I actually had a sell position running at the 1930 after identifying selling pressure around this area, and as soon as price tested that bearish trend line, continued with selling pressure below the 1090. I actually sold there, and I've moved my stop loss to break even here to protect my position against any sudden pullback that might likely happen at this point. I'm still tending towards a bearish momentum on the XAUUSD as long as price action remains below the 1930 and this bearish trend line that has been guiding bearish momentum since the later part of last week trading session. And if this bearish momentum continues to the downside, breaking down the 1925, we had more position. For the breakdown of the 1920, we'll welcome additional position on this one. So let's see how this is going to play out during the New York session. So I hope that we'll be on standby to catch either of these moves when they finally happen. If you have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and I promise to be willing to be of help in that regard. Then we moved on to talk about the EURJPY yesterday, and on the EURJPY we're still expecting a bullish momentum here. Remember, at the beginning of the week, we saw this bullish momentum right above the 140.800 level, which I personally missed. I missed this opportunity as price action move all the way to the upside. And one thing we identified at the beginning of the week was this channel between the 141.600 level and the 140.800 level, which is serving as the support level of that channel. Though we had a little breakout of the 141.600 here on Monday, we had some buy position. Remember, we took advantage of some buy position here, moved our stop loss to break even, and we were taken out of that position later on during the New York session yesterday. And to follow up with this buy position here, we took into consideration this impulsive move to the upside with the hopes that price action will do some retracement back into our golden zone area, where we said we'll be looking out for buying opportunity to join a trend continuation to the upside. And to identify the golden zone area, we brought out our Fibonacci retracement tool here, run it through the previous impulse leg, and we identified an area between the 50 and the 78.6% of that previous impulse leg as an area to look out for buying opportunity. And this is exactly what has happened here in the last 24 hours, in the last 48 hours. Price action retraced back into the structure, and you can see we've been witnessing buy pressure from this buy zone area. And what we said yesterday is that we are going to be using the 141.200 level as the neckline of this potential reversal pattern to join a trend continuation to the upside. And in fact, we saw the breakout retest of the 141.200 level, giving us an opportunity to buy the EURJPY. And since then, we have bought the EURJPY. Price action moved significantly well, moved into the 141.600 level before we started seeing another wave of selling pressure, bringing price down to the downside. So as we head into the New York session today, and for those who are taking advantage of this buy opportunity at the 141.200, I will be advising you to move your stop loss to break even, lock in some profit here as we continue to monitor price action. And to make things easy for us during the New York session today, I have identified a bullish trend line here, which we shall be using to guide our bullish momentum here. As you can see, price has consistently respected that bullish trend line, and I hope that this bullish trend line will further lead to the breakout of the 141.600 area, where we are looking forward to adding more position to our existing trade at this point. So we continue to remain bullish on the EURJPY as long as price remain above the 141.200 level. However, if at any point in time we see price break down the 141.200 or this bearish or this bullish trend line, please don't jump into the sell momentum yet, as we want to see some retracement and selling pressure on our lower time frame before we want to be joining that decline to the downside. And the reason why I'm saying that we should hold on for selling pressure after the breakdown happens is simply because of this buy zone that we have around this 141.200 $141.200 and the $140.800 level. And in fact, if a further breakdown of the $140.800 happens, I will be very comfortable to be selling below this level. So let's be on standby for either of this opportunity to take advantage of this move. And once again, for those who are taking advantage of the breakout of the $141.200, kudos to you guys for being on standby. And for those who missed out on this opportunity, let's hold on and wait for a breakout of the $141.600 level to join or add more position to our existing trade at this point. Then a further breakout of the 142 level will definitely be welcoming additional position to our existing trade. So these are my views here on the EURJPY for today. I hope I was able to simulate all the possible scenarios that will be happening here and show you much my screen so that you can use them as a reference point when you're about to make your individual decision for today. So for the sake of those who are not part of the beginning of the session, let's quickly do a recap of what we talked about today before we drop the curtain for today. So the first commodity we looked at today is the US oil, and I told you how we are anticipating the OPEC Plus meeting coming up today, and in that regard we have been witnessing the reflection of this anticipation on the chart in the form of a consolidation phase which has lasted over 12 hours in this market. And to guide our trading activity for today, we have identified a structure at the $79 level, which we said we shall be using as a yardstick for trading activity. And we can see that price has broken out of that bearish trend line that we identified earlier. As you can see here, price broke out of that structure to the upside and price has come back to do a retest of that level. So we are at a very critical point in this market right now, and that is the $79 level, which also shares a confluence with that trend line. So we are saying that we are looking out for buy pressure here to buy the US oil for today, with a further breakout of the $80 level to welcome additional position. However, if price breaks down the $79 level, which also shares a confluence with that bearish trend line, selling pressure below the structure will be welcoming a selling opportunity on the US oil. And in order to have a better understanding into what is really going on here, we scale down to a much lower time frame, like the 5 minutes time frame, where I was able to identify a structure here that looks more like a reversal pattern. And then we had the neckline around the $79.10 level. Price moved up a little bit, and then it appears to have taken us into a loss position at this point. If you are still in that trade, if you had moved your stop loss accordingly as price action moved as far as this, you might have been taken out in at break even. But if you are still in this trade, it's okay. Ensure your stop losses right below the $78 880 level, just right below that structure, and we continue to look out for buying opportunity above the $79.10. and if a further breakout of the $79.30 level happens here, we want to be adding more position to our existing trade right above that structure. Now, if a significant breakdown of the $79 level happens here, with selling pressure resuming below the structure in our lower time frame, then definitely we want to be joining a decline to the downside from that point. So that is my view there on the US oil. Then we went on to talk about the US tech, and on the US tech, we've been on the sell momentum since the beginning of the week, and we were taken out with over 300 pips at the 11,950 yesterday. And for those who do counter trend opportunities, you must have taken about over 200 pips on this one, as price action broke out the bearish trend line to test the 12,100. And now for today's trading session, we have identified a simple setup here where we saw a channel around the $12,100 level and the $12,030 area. And I told you how this channel could transition into two structures. It could transition into a trend continuation pattern considering this bullish move here, and if that is going to be the case at this point, we want to be seeing a breakout of the $12,100 level to join a trend continuation to the upside. However, if the structure here transitions into a reversal pattern, then we want to be seeing a double top structure. First touch, we see the neckline here at the 12,090. Price was unable to break the previous structure, and if a further breakdown of the $12,030 level happens, we want to be joining that decline to the downside. And I told you I have my sell stop right up below the 12,050. But if you are a conscious trader, you want your structure to mature first before you join, then you might want to wait for a breakdown of the $12,030 level to join that sell momentum to the downside. And there is a catch to this. Remember this bullish trend line that has been holding bullish momentum since the beginning of the year. I told you that as long as price gets into that structure, which also shares a confluence with 11,950, we want to be moving our stop loss accordingly. Wait out and see how price action reacts to that level to decide if we are going to be adding more position to our existing trade, or we are going to be getting ready to join a rally. So to add more position to our existing trade, we want to see a breakdown of both the trend line and the 11,950 to join that decline to the downside. However, if buy pressure resumes above this level, we continue to see buy pressure evolving into a reversal pattern on our lower time frame breakout retest, should be welcoming a buy position at this point. So let's be on standby to catch either of these opportunities when they happen. Then we went on to talk about the GBPUSD, where we have been caught within a consolidation phase in the last 24 hours. Though we have a sell position running and we have our stop loss somewhere right above the 1.23400 level, where I said we want to continue to monitor price action and see how price action reacts with this channel here between the 1.23400 level and the 1.23100 area. So to add more position to our sell position here, I said we should wait for a breakdown of either this trend line or the 1.23100 level to join a decline to the downside. However, if price action breaks out of the 1.23250, you might want to be joining from this level. But if you are a conscious trader, you wait out for a 1.23400 breakout to join the rally to the upside. And I am of the opinion that if a breakout of this level happens, it might likely transition into a retracement of this previous impulse leg here. Remember, we had the breakdown of the structure here at the 1.23800 level, where price action might come back to do a retest of the structure to incite another bearish momentum to the downside. So we need to take that also into consideration. Then we went on to talk about the XAUUSD, where we had a TP target hit yesterday. We had over 4,000 pips on the two position we had here, as price action hit TP target at the $1,901 level here yesterday. Then we saw buy pressure here. I told you I personally missed this, but I explained during the live session that if we see buy pressure around this area, we want to be joining that bullish momentum to the upside. And some of you must have taken this move, and you will currently be running with over 2,400 pips in profit. Now things became a little bit interesting as price action comes back to retest this bearish trend line that has been guiding bearish momentum since the beginning of this week. And as soon as price retests that structure, what we saw was quite interesting. We saw selling pressure from that level, and I told you I sold below the 1,930 with the hope that price action would do a further breakdown of the 1,925 to continue to move to the downside. So if that is going to be the case, I want us to position ourselves in such a way that we can catch the breakdown of the 1,925 to join that decline to the downside. However, if price continues to the upside, breaking out of the 1,930 followed by buying pressure around that area on our lower time frame, it could be an opportunity to add more position to your existing trade. Then we went on to close the day with the EURJPY for today. And for the EURJPY, we continue to hold on to our bullish buyers. And to guide our trading activity for today, I have a simple setup here where the bullish trend line here will continue to guide our bullish momentum. So as long as price remain above this bullish trend line, we want to remain comfortable in our buy position. We also have the 141.200 level as an area also we want to be as long as price remain above the structures to remain comfortable in our buy position. Then a further breakout of the 141.600 level should be welcoming additional position to our existing trade. So for selling opportunities here, I told you that we are not going to be selling unless we cite a breakdown of that bullish trend line. That is a signal that this trend line is no longer strong enough to hold bullish momentum. momentum, and if that happens, we don't want to join outrightly but wait for selling pressure below the structure to emphasize the strength of the sellers. Then we could join the decline to the downside. And I told you a breakdown of the 140.800 will be a very beautiful signal that the sellers are here to stay. So let's be patient on this one too as well, and continue to monitor price action using the structures I was able to identify here. So on this note, I want to wish you the best of luck during the New York session today. It has been a wonderful moment with you guys. I really appreciate your attention, and let's see how this is going to play out in the next 24 hours. And I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review all the pairs we have been monitoring since the beginning of the week, and let's see how well they are doing, and we anticipate the New York session with fresh new ideas. Do have a wonderful evening, everyone, and once again, happy new month. Bye bye.